Hi, I'm Doug Mackenzie and welcome to the latest episode of the Paytech Show. In this episode, we really have a bumper payments probe. From your RTPs to your SCAs, we cover it all here. So, first up, we speak with Jean Christophe Lacour from Amadeus, who are the authority on travel payments. Now, if you check the bottom of any plane ticket email you have, their name will be there. Over in central London, I heard from payment giants Worldpay, and in Canary Wharf, we also spoke with Mastercard's Mike Cowen, who heads up their digital payment scene. Let's get into it. How has the payments landscape changed over the last couple of years?
I guess I'm bound to say it's been an interesting couple of years, but if we literally talk about the last couple of years, so go back to 2017, particularly if I think about the UK, 2017 was a real landmark year because it was the year that debit card payments first outstripped cash as the most popular payment method in this country. Now, of course, the UK is not the most advanced country in the world when it comes to that. I think probably one of the other countries that we look after, Sweden, is there, but I think it was quite a significant milestone in terms of payments. I think one of the key factors behind that has been the massive growth of contactless payments, which have actually been around for a long time. You know, contactless started in the UK in 2007, so it's been over a 10-year journey to get to this point. But it has real traction now, I think not least because of the adoption of contactless as a way of travelling around London and the transport system. That was definitely a real kind of kick for it. And it has the sort of secondary benefit that if you can tap with your card to pay anywhere, then you can also tap with your phone to pay anywhere. So it's been a real boost for mobile payments as well, and that's been another big trend over the last few years. It's still a relatively small proportion of overall payments, but it's grown really significantly in the last few years, and the trend is ever upwards.
Oh, the payments landscape has changed quite fundamentally. There's particularly the emergence of alternative payment methods, particularly driven by the e-wallets that represent now about 30% of the processed value in e-commerce. So you could think about Alipay, WeChat Pay, but of course also the emergence of the X-Pays, so Apple Pay, Google Pay, Samsung Pay. The second key trend that we see is the emergence of the so-called buy now, pay later payment methods, such as Klarna, Afterpay, Affirm, where consumers start to choose installment credits and pay later methods for the purchase of their goods and services. Thirdly, we see the rise of e-commerce, or in particularly m-commerce, so the use of purchases through your mobile phones. So we see a continued increase of about 16% a year. And lastly, the other big trend I would see is, of course, China, the dominance of China now in the e-commerce market, where you see an increasing middle-class population that start to use their spending power both in China as well as abroad, which has a big effect, of course, on merchants in the acceptance of the payment method Chinese consumers want to use.
One of the biggest changes is PSD2. One aspect of that that's recently kind of started making headlines is SCA, or Strong Customer Authentication. Can you tell me a bit more about that and how it's going to impact customers and potentially even airlines or travel agents in the future?
Okay, as you rightly pointed out, Strong Customer Authentication is a major part of the PSD2 regulation. It was supposed to kick in on the 14th of September of this year. And I would say, thankfully for the industry, it has been pushed back to the end of 2020. I say thankfully because not everybody in the industry was ready, and I think it was only right that the regulator pushed that back a little bit. The impact on the consumer is that it's really meant to make them feel more safe when they shop online and to protect them. The impact on the retailer is that with Strong Customer Authentication, you require two-factor to authenticate your customers, and therefore there might be an impact on the conversion rate of your transactions. That is really the big impact on the retailers. If it's done very well, we will have the best of both worlds, where we will have security on the one hand, as well as frictionless. This is a challenge for making SCA happen. SCA is even harder in the travel industry because transactions are distributed. There's a lot of third parties involved, a lot of different use cases, complex use cases, which are different from a straightforward, say, buy a smart TV set on the website.
How much do you think that SCA is going to disrupt the industry going forward?
So the introduction of SCA helps with the reduction of fraud, which is increasingly important for this industry. As I mentioned, fraud is top of mind for consumers. So for consumers to feel certain, SCA can really give them that confidence whilst doing online shopping. But as we mentioned, it shouldn't apply to every transaction. So again, if merchants are able to reduce their fraud and provide security in processing their payments, on the one hand, consumers will have confidence to keep processing and buying through e-commerce, as well as for the low-risk transactions, those should go through in a frictionless method to make sure the conversion is as high as possible, and merchants can increase and make sure that they have maximum acceptance of the transactions that they process.
So we're going to be asked more often to prove who we are, and the way in which we're required to prove who we are is going to change as well. And that affects both the consumer who's shopping and the business that is selling to them. So the business has to modify their checkout processes. Typically their payment service provider will have to make technical changes on the back end to support these changes. It's definitely a change for the better, but I think it's quite likely that we will endure some kind of short-term pain as we go through that transition and people have unexpected changes in the payment experience as they're checking out.
So following on from that, do you think this will be the most disruptive part of open banking yet?
I think in the short term, yes, because it's going to be a change that directly impacts all of us. But I think that hopefully the disruption that it causes should be relatively short term, because that's a negative sort of disruption with ultimately a positive benefit.
Now, also in the travel industry, we're faced with people of various different geographies interacting with each other at one time. And as you mentioned yourself, local payment methods, or LPMs, are now a predominant interesting factor in the industry. How's this going to change the payments industry going forward? Are we going to see it fragment or even converge going into the future?
You're absolutely right that a lot more consumers want to use local payment methods or alternatives to credit cards. We've seen that, for example, in China, where Alipay and WeChat Pay are now the predominant way to pay. We've seen it in the Netherlands, where Ideal, for example, is the #1 way to pay online. So there is a real appetite from consumers to use other or non-card-based payment methods. It's not to say that cards disappear altogether, because a lot of those payment methods have cards underneath them, if you like. So the card rail tracks are there, but there is definitely an increase in number of payment methods. We work with a partner called PPro, and they support in excess of 100, and that's probably only maybe 1/3 of the total number of local payments worldwide. So I would say in the short term, to answer your question, in the short term we expect that fragmentation to continue. As usual, there will be some major players, global players. PayPal obviously has been a wallet in operation for a very long time. WeChat Pay and Alipay have now been around for a couple of years. We have other big wallets like Apple Pay and Google Pay, but there will be a lot of local payment methods continuing. They also serve different needs, different range of transaction value. Some of them are online only, some of them are offline only, some of them are both. So in a nutshell, we expect that divergence to continue for a bit longer, and then maybe as the world goes digital, as the world is more global, then maybe there will be a consolidation and some leading players will emerge to the detriment of some of the more local payment methods.
So with the dramatic uptake of different payment technologies around the world, how difficult has it become for institutions and merchants to really process and get a grip of all these different payment methods?
Yeah, so I think this is a really interesting point. With about 300 different payment methods across the globe, it is increasingly complex for merchants to process this by themselves. So what we do as a company is we make it really easy for merchants to have a single access to process those payments across the globe. And it's really important for merchants to make sure that they have the local relevant payment methods available in each of the markets. So if you take Brazil, for example, it's really important to make sure that you have Boleto available, because 30% of the market is represented by that payment method. Take another market like Germany, PayPal should be really part of your payment mix, or some of the account-to-account based payment methods such as so forth, because that is really where the prevalence of each of the consumers of those different markets is in terms of paying. So it's really important to make sure that cards is part of your payment mix, but also each of the relevant payment methods in those markets.
So I guess the need for all of these players of different sizes, different categories is exactly the same, in the sense that you always want to serve your customer needs in the best possible way, which really means offering local payment methods to your customers where you operate, in the markets where you operate, in the channels where you operate. So that remains the same for everyone. If you're a global player, it is harder because you serve multiple markets. Many of our customers operate, airlines for example, operate in 100 plus markets, which means that you have a lot of work to make sure that you are aware of what the local payment methods are that you should be operating. And again, bearing in mind that as an airline, you will be offering products that can range from a 15 euro excess baggage right through to several thousand euros if you go first class, for example. Now, not all payment methods will serve all of that range, so you have to make some choices. We work with PPRO, our partner, on local payment methods, really because they provide a simple way to integrate payment methods and a single way of doing that, which means that if you're an airline, for example, it's plug and play. You have access to a catalog of local payment methods, and thanks to the Amadeus payment partnership with PPRO, you can literally activate those methods as you see fit. So you need to do your research, obviously. You need to do some A/B testing, because just because a local payment method works well in the market doesn't mean it's necessarily going to work well for you as an airline or for you as a hotel. So you need to kind of play with that, understand the cost of that payment method, understand the uplift you're going to get in sales and in conversion, and then fine-tune from that. But the main thing is that you have the intel and then you have the capability to activate on and off.
So can you tell me, do you think there are any expectations around real-time payments currently?
Yeah, I think that there's one key area which is around pending transactions. So that payment that you see on your statement that says pending, where you're not really sure, well, do I still have that money? Has that money gone out of my account, or is it still in my account? I think a lot of customer research says that is a pain point for people. They don't like that lack of certainty. So I think that is definitely an area where there's room for improvement, and actually there are some things that we're doing, some things that other people are doing to try and minimize the number of payments that appear on your statement that appear with that pending status.
Now, in a lot of geographies, real-time payments or faster payments are expected. What does this mean for payments organizations and, well, the industry as a whole going forward, having to meet that customer demand?
So I guess on the one hand, it means that payment providers like ourselves have to support those new payment methods so that our customers can benefit from them and they can add them to their website or other channels. And in that sense, this is no different from any other payment methods that we're providing, whether it's through our PPRO partnership or through other partnerships. I guess what it changes is that it's the intersection of the real-time payment with the travel. So if I take airline, for example, if you buy a ticket is something that you typically buy now and consume later, although you can buy, right now and then fly literally within the next half an hour, so that's possible. But typically there's a lag between the moment you buy and the moment you consume, which means that the product itself lends itself to, I would say, increase fraudulent activities, which means that on our side, we need to work with global partners like Certify, for example, in order to ensure that we protect our customers and their customers, the travelers, in the best possible way. So again, we have a simple and single integration in Certify, as we do with many of our partners, and they in turn bring, if you like, the best expertise that they have in terms of fraud management. And real-time payment lends itself there because you need to make a decision, at the point of payment, rather than have the luxury of waiting. Although I would add that irrespective of how real-time the payment is, and cards are also real-time in terms of authorization, you still have other fraud checks that you can do right until the point where the traveler is going to board their flight. So, but all in all, that's really how real-time payment is changing the equation.
So now that real-time payments are effectively demanded by everyone, how can institutions really streamline their payments to make sure that they're not just compliant, but also, they prevent fraud going forward?
I think the fraud piece is really the critical piece here. So fraud is becoming an increasing concern for consumers. We did a survey recently where we found out that about 53% of UK consumers are extremely concerned about the possibility of being hacked into and identity theft. So from a merchant perspective, that means that consumers should be feeling really secure when they shop on their website. How can they do that? They need to make sure that, one, they have the right fraud tools in place. So that means fraud tools that use machine learning to predict fraud and prevent fraud. The second element, of course, in fraud prevention is the introduction of strong customer authentication. However, with strong customer authentication, it's always the balance between friction and security. So with the introduction of strong customer authentication, we advise our merchants to make sure that they reduce their fraud as much as possible, so they can make use of some of the exemptions to strong customer authentication. So exemptions enable merchants to provide a frictionless user experience. Now, Worldpay as a company, we really offer 3 types of solutions to help our merchants to manage the world of SCA, as we call it. So one is a very sophisticated fraud tool called FraudSight that uses machine learning to prevent fraud. The second element is our SCA exemption engine, which enables merchants to request exemptions to strong customer authentication for particularly their low-risk transactions, and therefore offer a frictionless user experience. Now, certain transactions will need to have strong customer authentication because it may be requested by the issuer. In that case, there's a new authentication standard called 3DS2, and Worldpay provide a platform and a service that merchants can use to use this new authentication mechanism, and that platform is called 3DS Flex. It uses the latest authentication standard called 3DS2 that enables both the latest authentication experiences using biometrics, for example, so you can pay in-app using biometrics. It provides the best experience on mobile, and it provides about 200 different data elements to issuers to make sure that they can provide and make the best risk-based decision for any of the transactions. So this will help the issuers to understand the transaction and therefore assess if they want to apply strong customer authentication to that transaction, or if they want to process it in a frictionless manner.
Blimey, that was an incredible episode. We got so many industry heavyweights all together in one episode. So thanks for watching, and make sure to catch the rest of the Paytech series on www.fintech.finance. See you there. Bye.